Welcome to the Rick Helps Real Estate Show. Well, the headlines say that sellers are slashing prices in these 5 cities. Are they? Well, yeah and no. We're going to take a look. Take a look at what's really going on. Are they slashing prices? You've heard me talk a lot, and I'm going to kind of beat it up again today. There's a difference between price cuts off their original asking price and average sales prices declining. In other words, if you're a follower of Zillow and you price where Zillow is, Zillow admits that on homes that are not listed, that they're off by about 6 to 7%. So think about that. An $800,000 house, they're off by 50K. They brag that they're closer on houses that are for sale, that are listed, but that doesn't really mean that much. It means that when you look at that house that was for sale had a realtor actually do a deep dive into it and get more accurate data, and Zillow came along and kind of followed it. So what's this all mean? Well, here's a headline that caught my attention this morning, and it says sellers are still slashing home prices in these 5 cities. What 5 cities? Well, Phoenix is one of them. In several markets, price cuts remain common, led by Phoenix, where nearly a third of listings, 29%, carried a price reduction last month. Phoenix was followed by Tampa, San Antonio, Texas, Denver, Portland. Okay, here's our price cuts. We are sitting here at $27.93 as of Saturday, May 23rd. And when you look, that's kind of slightly lower than where we've been, but hey, still made headlines. So you're not seeing this huge increase in price cuts. You're seeing some. That's a pretty healthy number. I mean, we're certainly not down here. But if you look at the average list price per square foot, and this is where I'm going to spend a little bit of time on this one, so bear with me. This is showing that we're up versus last year. What the heck? Well, let's do a little adjusting here because the premium market is doing very well, luxury. Let's remove anything over 1.5 million, shall we? Take these little check marks off. Now what happens? Whoa, look. The red line here are this year's asking prices, not sales prices, the asking price. And there's last year. Last year we had $271 a square foot. This year, $265. So they have come down from last year on the non-luxury market. So basically anything under 1 million. If I take the 1 million out, then the gap grows even larger, 251 versus 257. So they are coming down versus last year on the asking price. Now, here's the monthly average sales price. This is going to do the same thing. This is going to show an increase versus last year because luxury is doing very well. I think we sold a $10 million home last week. You think that's going to skew this number just a little bit? The thing to remember, though, when you're looking at these prices, and a lot of you do this, you go in and you look at the price history and you go, this guy bought this for $200,000 back in blah, blah, blah. Now he's trying to sell it for 800. He's nuts. Well, he's not nuts if that's what the market price is. I mean, that's what market prices do. During periods of inflation, assets rise. We've had some pretty hefty inflation. We had an awful lot of government intervention, a lot of money put out there. That money is still out there, folks. It has not dried up. So asset prices continue to climb. But there's a difference between the list price and the seller saying, well, I guess I can't get that Zillow dream price. Let me pull it back to reality. And I've seen a few headlines saying sellers are finding reality. Sellers and buyers are starting to reach agreements. In other words, sellers are starting to say, well, I guess I can't get that price. It's just not happening for me. Let me pull back. And it's showing up in the numbers. Not huge. Don't get me wrong. We still have an affordability problem, but there's a lot of reasons why that's going on. It's not because of greedy sellers, because some sellers are getting their asking price. We had one last week and a half ago, listed it for actually more than what they paid for it last year. Not much. I'll be darned if it didn't go under contract in one day. Why? Well, it was in a very popular area. It was a very popular floor plan. It didn't have an HOA, and it had demand. Boom, they came in, gave us an offer. Listings under contract is this line right here. I'll draw a circle around it. Pretty close to last year. So nothing falling off the earth, but we're going to start going down, down, down as we get into the wonderful summer. What is a Zestimate? How accurate is a Zestimate? Zillow. Off-market homes has a median error of 7.2%. In other words, they're putting that out there for you to look at. Hey, Rick, here's your house. It's worth $850,000. Well, you better take 7% off of that. It's very rare that they do an estimate that's too low. And that's what we're seeing. People are looking at that Zillow and going, well, I want to stick to that price because by golly, they know what they're doing. If you like Zillow and you like their price, go ahead. There's a difference between putting your house on the MLS to list it and putting your house on the MLS to sell it. People, unfortunately, are finding out the hard way this spring that this spring was not as hot as they thought it would be or should be. And therefore, the house didn't sell. So they're coming in and they're doing two things. They're either reducing the price or they're taking it off the market. And our canceled listings have not spiked up, folks. They're up, not by much. We're just not seeing a whole lot of people pull them off the market. And here's why. We're at 6.61 on our interest rates. But there's a lot of reasons to wait. We got a new Fed chairman. Some large majority of people out there going, well, no doubt, new Fed chairman's going to come in. He's not going to be like the last one. He's going to lower rates. The bond market's saying, not so fast, pal. We can't afford to raise rates. The bond market's kind of revolting. When you really look at our national debt, we can't afford to raise rates. If we raise rates, the amount of interest that we own on our debt goes up. We're between a rock and a hard place. Back in the 70s, we could raise rates. Back in the late 70s, when Chairman Volcker just shot him up to the moon, 17%, our debt to GDP ratio was only 34%, folks. Now we're 120 to 124%. We can't afford to add more interest to our debt. What do? I have no idea. We may just try to inflate our way out of this. It's a very complicated mess. And so I'm just kind of watching these numbers on a macro scale and saying, wow, what are they going to do? And we're down here in the mortgage business, real estate business, saying, well, if they just cut the rates, everything would be hunky-dory. True, maybe, but prices would start going up again. Affordability will probably still be out of reach for a lot of people. And that's the situation that we're in. So when you look at this headline, it says sellers are slashing prices. They're slashing their original asking price. You're still going to be able to look and say, he sold it for this, but Bob bought it for this. He did very well. Sally paid $350,000, sold it for $550,000, did very well. Did she get her original asking price of $6.25? No. That's what's making the headlines. Sally wanted $6.25 and didn't get it. Doesn't the market suck? No. Still got a pretty good rate of return on that house, I'm afraid, folks. So if you have any questions, shoot me an email at rick@rickhelps.com. And don't forget to hit that QR code and get an accurate zip code report for what's going on in your area. Not an estimate for your house value. There's other tools I can pull out to help you with that, but ask me. Use that zip code report. And don't forget also down in the description, tell me why you haven't signed up for my newsletter yet. It comes out every Monday morning at 7 a.m. Take care. Have a great day.